Welcome back. In today's video, we'll be diving deep into the latest developments surrounding Faraday Future and explaining why, despite positive news, the stock continues to plummet. We'll break down everything you need to know about the company situation, its finances, and the factors driving its share price down. Before we get into the details, don't forget to hit that thumbs up and subscribe for more updates on the stock market. At the time of recording, Faraday Future stock has dropped 9.4%, even though it reached a high of $6.09 earlier, and pre-market trading saw it break past $7. Naturally, many investors are left wondering, what on earth is going on? To answer that, let's revisit the key events that unfolded late last night. In case you missed it, Faraday released some important updates, and I actually posted a video around midnight, since, of course, the company decided to announce the news at 10:47 p.m. There were two key announcements, one leaning toward neutral to bullish, and the other mixed. Let's dissect them both and see how they're influencing Faraday stock movement. The first announcement was that Faraday Future has regained compliance with the Nasdaq. This was a pleasant surprise for many, as it turns out the company needed only 10 consecutive trading days to achieve this, rather than the anticipated 20 days. This shows that Faraday has a stronger rapport with the Nasdaq than many other companies. For those who had predicted a longer time frame, myself included, we stand corrected. Credit where it's due. Molasses on Reddit called this one right. I previously expected 20 days, but Faraday made it happen in just 10. This is certainly a positive development, a rubber stamp of sorts, signaling that Faraday has managed to live another day and continue its journey. However, the second announcement is where things get a bit tricky. Faraday Future revealed that it secured $30 million in financing commitments from entities in the Middle East, the US, and Asia. Now, if you've been following my previous videos, you'll know that I mentioned a possible deal with Master Investment from the UAE. While it turns out they are involved, this deal isn't a game-changing merger or joint venture that some had hoped for. Instead, it's strictly a financing agreement through convertible notes, which also come with warrant options. These warrants have conversion prices of $5.24 and $6.29, which complicates the situation. Here's why this is a double-edged sword. While $30 million in financing sounds like good news, the reality is that it's in the form of convertible notes. For those unfamiliar, convertible notes are essentially short-term loans that can be converted into equity, often at the lender discretion. I've described these as being like payday loans. They provide Faraday with quick, upfront capital to continue operations, but the repayment terms can be harsh. These notes can heavily dilute existing shareholders by increasing the total number of outstanding shares when they are converted into stock. So this $30 million would serve as Faraday Lifeline, giving the company another opportunity to continue fighting. However, they'll need to manage this cash wisely, as shareholder dilution is a real threat. Faraday has already raised its authorized share count, and in the next year or so, this ceiling could be reached due to the continued issuance of new shares to cover these convertible notes. This over-reliance on convertible notes is hurting Faraday stock, as it steadily erodes shareholder value. To put it into perspective, Faraday market cap currently hovers around $60 million to $65 million. For a company of that size, securing $30 million in financing is impressive. But again, the impact of these conversions will far exceed $30 million, as the share price is driven down and more shares are issued to cover the notes. Investors are understandably frustrated with companies like Faraday constantly relying on this type of financing. Faraday outstanding share count has already increased tenfold, not from issuing new shares directly, but to accommodate these convertible notes. Based on Faraday's most recent earnings report, the company still needs to fund $211 million through these notes, in addition to the newly announced $30 million. This situation creates a downward spiral. The lower the stock price, the more shares are issued, leading to further dilution. So why is Faraday stock taking such a hit today? It boils down to this: the market is fed up with dilution. Investors are tired of seeing their shares lose value every time the company issues more stock to cover its debts. This $30 million deal, while providing temporary relief, does little to change that dynamic. If anything, it reinforces the pattern of dilution, further weighing down the stock. Let's consider what this means for Faraday Future. The company needs to fund $211 million in outstanding convertible notes. If it does so at the current share price, that will result in a massive number of new shares being issued. If the stock price drops further, even more shares will need to be issued to cover the same debt amount. The math here is simple but brutal. The lower the stock price, the worse the dilution gets. In addition to this financial strain, there's also growing speculation about manipulation in the stock. Fails to deliver FTDs have been on the rise, and short interest is increasing, with roughly 19,000 shares shorted. The number of available shares to short has been dwindling, often dropping to zero, which has pushed the cost to borrow up to a staggering 245.79%. Faraday remains on the threshold list, which is associated with FTDs and naked shorting, raising further concerns about possible market manipulation. With all these factors in play, reliance on convertible notes, dilution, rising FTDs, and short-selling, Faraday finds itself in a precarious position. It's clear that the market is reacting to these financial uncertainties, and the stock is suffering as a result. To sum up, this $30 million financing deal is both good and bad for Faraday. It provides the company with much-needed capital, but it comes at the cost of further dilution, which could continue to drive the stock price down. The market reaction today is a reflection of investors' growing frustration with Faraday financial strategy. As always, I'd love to hear your thoughts. Did you buy the dip, or are you staying on the sidelines? Please share your thoughts on this update in the comments, and don't forget to give this video a thumbs up and subscribe to the channel. Your support is greatly appreciated. Thanks for watching, and stay tuned for more updates.